to the stock market morning prep video for Tuesday, March 18th. We did get that little bit of a move that we were looking for to the upside, and it all came on a gap opening. Dow Jones up 181, Nasdaq up 34, S&P up 17, almost 18 points, and a Russell 2000 up about 7 points, almost 7 points. So we did get a little bit of move, but the move was pretty much subdued. After the big gap up, we actually went sideways a little bit. Faded lower and then pretty much chopped around all day into the close. So you as a trader are going to need to know and get some sort of a barometer to say, hey, when do I get active? I had a few emails yesterday saying, I just got chopped up. What am I doing wrong? Well, number one, you should be following a few things. I'm going to show that to you in the chart segment, so just bear with me on that. I want to go over a few things this morning. And my analysis at the moment remains the same of what I spoke about yesterday morning. I do think that the markets may challenge the highs, or at least try to get close to it. Still make that lower high from the high itself, and then I would see, or I would right now continue to see the market start to head lower and go into some sort of a correction. Remember, like I mentioned yesterday, the markets are made to fool the masses, so we really need to pay attention to that. Okay, so we did get a little bit of a relief rally. That's all well and good. One day does not make a trend, and I do think that as volatility picks up at these upper end of the ranges, that means that the market and price is going to vacate the area. So let's just be patient here. There's going to be plenty of opportunity. We do have Janet Yellen speaking for a two-day Fed. That's going to be a market mover, especially bonds and especially gold. So let's see what she says. If anything is pretty much status quo from her tapering, and she doesn't say anything too exciting, which I don't think she will. I think the markets will continue to trek, to do its thing and trek lower here. So we'll see, though. We don't know. We want to let the markets tell us. We want to let our analysis just get from what we get from the charts and be prepared here. Okay. So right now we do have a sell signal off this February. We had off the February 6th low. We finally got that signal a couple days later. Now we got a sell signal here. Now it is a little too tight. I like to see this. The bullish percent SPX move a little bit away from the 8 because we could get a little bit of chopping, like something like this here. But as of right now, we have gotten a sell signal. This is a very good, reliable indicator, as you can see, as I marked here on the charts. Okay, now a couple things that I want to look at. Obviously, is the stocks above the 50-day moving average. And we are still on a sell signal up in this area. So everything is still telling us that we are looking for lower prices to come. But again, we want to take it day by day here in this extra volatility environment that we have. Here's the VIX. The VIX came out of the Bollinger Band, now came back in. Now, if we get a close below, this would give us again a buy signal for equities. But I would take this with a grain of salt here. We have positive divergence forming here in the VIX, which tells me that I think you're going to see higher prices and volatility, which tells us that obviously we're going to have markets moving lower again. So this is actually a positive for the VIX and negative for equities. So another feather in the cap that we're looking for lower prices. Now, the two that we're going to pay attention to is obviously the emerging markets, the EEM ETF, right? This is the first move low we had on down to February 6th when emerging markets really sold off pretty hard. And as well, we did now get a bounce. But what's happening here? We're still making lower lows and lower highs. All we did is get a relief rally here. And this is a bear flag off of this flagpole. And you can see we broke down here. We have an 8, a 20, a 50 cross lower. Everything's pointing lower. Moving averages are moving lower. So, yeah, we are a little bit oversold. So we do get these little retracement rallies. But this is nothing new to me. This doesn't tell me that we are now have reversed and are going to challenge highs or make new highs in the EEM. So that's another concern, as well as China. Now, China's econ data continues to weakening, telling us that their economy is contracting. Again, not a good sign when they're a big buyer of our goods. So this is a big concern. And the markets sometimes do ignore certain things, and they have been ignoring what China's been going on, as you can see, for quite some time, pretty much all of December and first quarter of 2014. So this, to me, is a big red flag. And I've mentioned in 2013, eventually at one point, right, we don't know, but China will be the canary in the coal mine, and it will affect our markets. And maybe this might trigger the sell-off. We don't know, but if you can't not just take a look and just shy away and say, ah, it's not a big deal, because it is a big deal, especially for the longer term players or longer term investors building positions for their portfolio. You need to know this, because at one point you'll wake up and markets open down and they stay down for several months, several weeks. So just pay attention. This is not a good sign here. So we're breaking down significantly in China. So that's something that I just want to make everyone aware of. All right, so now let's go right into the chart survey. And we looked at the yen. And the yen here has a nice ascending triangle. As you can see off the low, we had a series of lower lows and lower highs. We have now broken bearish symmetry, and now we're making higher highs and higher lows. We stabilized here. If you recall the last several videos, I have a Fibonacci cluster of resistance right up in here. I just took it off the cleaner chart just to show you. It's right up in this area. If we take that out, now we've been bouncing around here since February, but if we take that out, guys, then we're going to look for at least a 200 and then possibly high. And if that happens, it's going to put significant amount of pressure in equities. Okay, so this is something that you need to watch. If you're not looking at the spot yen future, you can look at the dollar yen, which is correlated. So dollar yen will move with spiders in the same direction, where the Japanese yen will be inversely correlated. Okay, just an FYI. Now, this is what I wanted to say. Now, this is what we did yesterday. So if you didn't come in long over the weekend, which I personally would not do, it's just way too much risk. Look at what happened. You came in long, you had a 15-minute run, and then that was pretty much it for the most of the day. And this is where the novice guy would get chopped up here and say, hey, you know what? I don't see it. I don't see any good quality setups. Let me just back away. Unless you're a scalper, this is just a terrible day trading environment for yesterday's trade. Okay, and you need to know, you need to have a barometer that you follow. Again, having several emails. Hey, Mark, how do you know when to back off and not trade, or when to step it up and trade more? You need to follow certain things during the day, and that's what we teach in our trading classes. One being the vol spread. I mean, the vol spread is pretty much one of the best reliable indicators for intraday trading. You need to look at that, and that'll give you the gauge to say, hey, you know what, I'm backing away. And even though yesterday the vol spread didn't do much of just drifting higher slowly, which told you definitely not to short, and also told you, hey, there's really no extreme volume coming in after that initial gap up, as you can see. Because look what happened, right? The volume just died. Literally died, and then we just went sideways pretty much all day for the last 15 minutes of backing and forth. But look at this. Told you to do nothing yesterday, unless you're looking to add to your positions or whatever. But just keep that in mind. Find yourself a barometer and really look at that, and that'll give you a cue to be active or not to be active. And there's many ways of doing so. Okay, so let's look at, just want to just point out the monthly ES just to show you where we are. We did have an outside month at one point this month, and now we are back into this large engulfing candle. So let's see where we end, but I just want to show you a mid-month E-mini. And again, 1272 extension off the recovery lows. That's significant, guys. That's pretty big. So I don't think that we would just break right out of it, in 1 month. I think it needs to chop around a little bit, create more energy, and then possibly bust out of it. But again, Janet Yellen's speaking today and tomorrow. That's going to be, or could be, a game changer in either direction. Okay, lower lows and lower highs. Daily chart of the ES at the 1272 extension capped it perfectly. Okay, usually moves start to usually slow down, if not reverse, at these areas. And sure enough, we did get that. So we sold off about 4 or 5 days, and now we did get that one big day up. We're down about 3.5 handles. So no big real change here at the moment. So we'll see what happens today. I think the markets will be quiet for another couple of days, and then really start to react after her Senate committee is over. But again, just want to show you where we're at the daily chart. Right now, this is the daily charts look bearish to me. So 1 or 2 days up. I'd like to see it get back up into these areas, into the 65, 70 area, and then fail, make that lower high from the previous high, and then we resume our downtrend. And that's exactly what I mentioned yesterday. Here's just an hourly chart from yesterday. As you can see here, we popped up and pretty much just kind of dove around, doing not much of anything here. Okay, now we'll go right into the chart segment. Spiders. Here's gold and bonds. These two, of course, and spiders, they will all affect what Janet Yellen says today. So, again, bonds are holding up very, very well as gold and as well as spiders. So one of these indices are correct. And it looks like to me, I think that we're looking for lower prices at one point. Gold and bonds actually continually to move higher, holding in there while equities are just kind of either selling off or just moving sideways. Something is wrong with this picture. Okay, Spider, just want to show you where we are here. Not much of anything, from that sell-off that we had last week. Recovered, we had a little bit of a bounce, got us back above the 20 on the Spiders, but again, nothing new for me. This doesn't look anything great, and as you can see here, we're really starting to unwind, which is good. I think it's a very good sign. I think you could see the 50-day moving average, or at least this lower trend line before this market even pauses to the downside. Here's the transports, very weak bounce in the transports. Our leader, as you can see, not leading the markets at all. If anything, leading to the downside. So again, another big red flag for me is looking at our indices. Russell couldn't even get back above this long-term uptrend line from the 2012 lows. Now we're moving back lower. It didn't even get green yesterday. Well, we did get green, but momentum actually shifted lower again. So again, lower volume, not a good sign. You can see the leaders really faltering, not doing much. Qs couldn't even get back above the 20-day moving average. And a lot of the high beta names are really starting to show signs of weakness here. The markets are definitely tired, and they're fairly valued. So what's the reason why would you want to buy stocks at these levels? It's really not. There is not. It doesn't really give you a reason or any type of movement into equities versus other asset classes. So here's the diamonds, our laggard. We did get back above the uptrend line, but we're still kind of below the 20. So again, not really, to me, I don't see anything so exciting about owning equities at the moment. Now, I do think in the longer term picture, I keep saying it, that the long term picture looks great. We're still in the long term channels, and of course, I'll do that. We do that once or twice a month just to show you the big picture. But I do think in the longer term we're fine. But there are going to be some significant pullbacks. I think this year. I mean, we haven't had a 10% pullback in I think over 2.5, 3 years. So I think a 10%, 12% correction is due. Again, it's not what I think. It's what I'm seeing in the charts, and it doesn't have to happen. Let's just keep that in mind. Remember that. It's been very difficult shorting the market, and until we get a full sell signal in the market, making lower lows, lower highs, taking out significant support, and giving us clues that, hey, this market is time to get shorted, and then we can start shorting rallies. That's the only time I'm going to be looking for that. All right, let the market prove itself that it is headed lower. Here's the OIH. I'm only going to give some of these sectors because they're all getting hit now, right? Because we have significant retail buying on margin. Now when the market sells off, they have to get rid of their stocks, and everything will get liquidated. So remember that. But it's going to be good because when you have a light book, you're going to be literally scooping up bargains, and that's what you want. All right, here's the SLB from that index. Not bad from that sector, excuse me. So you got a nice little move low below the 50. So let all of these sectors digest and start looking for some quality trade setups. KBH back into the big zone again. So we had a big, decent little run, and now it's sold off again. So these builders are barely holding in there, but I like it for 2014. As you know, I like the banks and I like sols. Those are my three favorites, and I'm going to be watching and looking every day for these sectors for market weakness. Here's the XLF. Now the XLF did okay yesterday. Some of the banks did well, as you can see here. Goldman Sachs barely got above it and then really sold back off again. So banks are getting liquidated. Financials we need a good run in financials to get the markets to move back up again. But look what's happening in Citibank here. So I wouldn't be owning any banks at the moment, but eventually, it's something that we will start looking to pick up once this market get some sort of reversal. Here's the lastly is that EEM. I wanted to show you on the Ninja chart. Did the fib numbers, and again we got up to a 38% retracement. And when you get markets that are very weak, that's basically what happens. You barely get up to the 38, and then it reverses again, and that's what we had. So I just want to show that to you on the Fibonacci charts. Okay, guys, that's pretty much it. Remember, Janet Yellen is speaking today and tomorrow. Markets should be pretty light going into the next couple of days. So remember, find yourself a barometer. My barometer for intraday is definitely the vol spread and the VIX and the tick I use. Intraday, combine all three. Teach that in the trading class, and that's something that you really need to know because you don't want to be over. You want to get that guide from that barometer to say, hey, I'm going to be busy today or I'm going to be light today. Okay? Have a great day. We'll speak to you tomorrow. Take care, everybody.